Hey guys, Ben here helping you earn more, spend less, and invest the difference. Now, it's December, which means New Year's is right around the corner, and if you swore that this would be the year that you take control of your finances, then the first step is to smash that subscribe button. But the second step is to make sure you have a good credit score. But if your credit score is low for whatever reason, you don't already have a credit card, then a common tactic is to get a secured credit card because they can easily be obtained even if your credit score is trashed. And then those on-time payments will, over time, help rebuild your credit score. So in this video, I'm going to be talking about the absolute best secured credit cards for 2022. So right off the bat, my all-time favorite secured credit card for 2022 is, drum roll please, none. Wait, what? Yeah, that's right. Secured credit cards are trash. You should never, ever get a secured credit card. And I'm going to tell you what to do instead. Now, there's a lot of reasons why secured credit cards are trash. First, the majority of secured credit cards require the issuer to perform a hard inquiry on your credit report. This hard inquiry will, by default, lower your credit score by a few points. So while you're trying to build your credit score, right off the bat, your score actually just went down slightly. Next up, a secured credit card requires a security deposit, hence the name secured credit card. This means that you have to give the company some money up front, usually like $200 or $500 minimum, and then they hold on to your money and give you a card with a spending limit equal to your security deposit. Now, this is problematic for several reasons. First, because you have to fork over a lot of money right off the bat for a security deposit, and if you want to actually buy something, you can't use that money that you gave them as a security deposit. You have to have additional money on top of that deposit. And for a lot of people, they just don't have a few hundred extra bucks that they can just tie up in a deposit of some sort that they can't otherwise use for anything. The credit limit of these cards usually equals the deposit, so the limit is going to be very low. This means that even something like buying $300 or $400 worth of groceries for the family is going to nearly max out your card. And maxing out cards or otherwise having high credit utilization rates is going to crush your credit score. Credit utilization rates make up a whopping 30% of your total credit score. And lastly, generally speaking, the higher the risk of an investment, the higher the interest rate needs to be to offset that risk. But with a secured credit card, these companies are assuming virtually no risk since they already have your money in the form of that security deposit. If you don't pay your credit card bill, it's no big deal. They already have your security deposit and they're just going to keep it. So there's no risk to them. Yet they often still charge obscene interest rates on these secured credit cards that range well into the 20% or more annually. A no-risk credit card like a secured credit card should theoretically have an interest rate of more or less like 3 to 4% annually to put it more in line with other loan products. But these card companies know that they can charge higher interest rates. They are scamming you because they know you're stuck with limited options because of your low credit score and don't really have a choice but to pay these obscene interest rates. That is, until now. Now there is a better way, ladies and gentlemen. The One Finance Debit Card from MasterCard is a complete game changer. Even though it's a debit card, it's actually going to boost your credit score. Mind-blowing, I know. That's right, a debit card that boosts your credit score. So the way it works is that you're going to open an account and fund it with some money, either manually transferring some cash or setting up an automatic deposit. Now, remember that $500 we previously needed to fund a security deposit? Start by putting that $500 to some actual good use and put $500 onto your debit card. From there, any spending on that card that is allocated to the credit builder pocket is going to boost your credit score. So think of it kind of like this. Normally when you swipe a debit card, they simply take money out of your account to pay for that purchase, and that's the end of the story, right? Pretty simple. But with a One Finance debit card, when you swipe your card, they are basically creating a micro loan for you, and then they're going to turn around and take money out of your account at the end of the month to repay that loan. Now, creating a loan just to immediately repay the loan may sound a little bit redundant, but because it was technically a loan, they can now report a successful on-time payment to the credit bureau that you successfully repaid a loan each and every month. Thus, it's going to help your credit score. Now, since these microloans are repaid automatically and instantly, it's impossible to ever have a late payment reported to the credit bureaus. The only thing that's possible to ever be reported to the credit bureaus is a successful on-time payment. So it's not possible for this card to hurt your score. It can only go up. Now, in addition, since it's a debit card, there is no hard inquiry on your credit score. So not only do you save those couple of points, but there's also no way to be turned down for this card if you have a terrible credit score, because they aren't even going to be checking your credit score. Plus, unlike a secured card where the security deposit is unusable, with the One Finance Debit Card, any money that you give them is 100% usable anytime you want. The money isn't locked up as a security deposit or anything. You can actually use your money as it should be. The card also offers some nice features, such as an optional, convenient round up feature similar to popular apps such as Acorns or Betterment, where it will round up your spending on any purchases up to the nearest whole dollar, and then it'll put that change into a savings account for you. Now, money inside of your savings account grows at either 1% or 3%, depending on which type of account it is, which isn't going to make you rich, but most banks only offer 0.01% interest, so potentially up to 300 times more interest than an average bank account. So when you're comparing apples to apples, earning 3% interest on your savings is pretty phenomenal. Even high-yield online banks such as Marcus by Goldman Sachs only offers 0.5% interest rate. So this could still be up to 6 times as much interest rate as high-yield accounts. They also have a pockets feature, which can be as simple or as complicated as you want to make it, but the pockets are used for people who like to set themselves on a strict budget. These pockets make even the most complicated budget system an absolute breeze and removes all of the tedious accounting practices that were previously required with budgeting. And of course, your money in the account is FDIC insured, like all banking products, so your money is nice and safe. So stop doing things the hard way and ditch your secured credit card. Start 22 off right on the right foot with the One Finance Debit Card. This product is superior to a secured credit card in literally every way imaginable. Secured cards are trash. If you want a more detailed breakdown of the card, then you can see my full review here. And if you're interested in applying for the card, I'll leave a non-referral link down below where you can go and apply for this card. And if you enjoyed this video, consider subscribing, give the video a thumbs up for the YouTube algorithm, and as always, I'll see you all again next time. Thanks.